Hey guys, Weston Nakamura from Real Vision in Tokyo. Okay, so it is a little bit after US cash equity open on Wednesday, November 10th. It is CPI day, and the US now has a six handle on its inflation reading. So that came out. Now, in terms of trading, I just wanted to point something out. I'm not talking about trading CPI per se. I want to flag something about like market, yeah, behavior and structure and all that. Okay, so these are four different charts of different asset classes in no particular order either. Like it's not like one's more important than the other in terms of placement. Okay, but upper left is VIX, upper right is dollar yen and the 10-year US Treasury yield. Bottom left is a chart of Tesla, and bottom right is futures on silver. So again, these are very different instruments, completely different things, right? An index of 1 month implied volatility for the S&P 500, a cross rate between the Japanese yen and the dollar, as well as what the American government will compensate you for lending them money for a decade in interest. Then you have an EV automaker, and then you have silver December expiry futures. Now, obviously, this is going to be like a big sort of macro knee jerk move at the CPI release, which is what this is, like right here, right? Now, I don't know if you could tell, if you could really see this that well, but the cursor on my mouse should basically kind of like align across like all four charts simultaneously. But what I want to show is this. So the reason I have Tesla up is because obviously Tesla's been on a crazy run, and then also has been falling pretty dramatically the last few days. But going into the open today, Tesla, I was watching it for it to break 1,000 because that's a very psychologically important barrier level, and there's also a ton of like put options, open interest there. It's a potentially very precarious level for it to break, and it broke on volume. And when it broke, it started to gain some momentum, and then it suddenly got stopped in its tracks at like 932, 933 ish. So it's kind of weird that that happened. But then if you also look on the other charts at 933, you can see like the chart above. 933 is when the VIX just took this weird sharp spike up and then reverses down, and then that's it. That was like the top for that time frame, and then it just goes on its downward move. Okay, so that also began at 933. Then over here, also at 933 on the upper right, that's where the 10-year US Treasury yield for the post CPI window of time, that's where that bottomed and then took off to the upside, and that's also where dollar yen bottomed and took off to the upside. And then silver is on this like 3.5% or more rally on volume. There's like I'm getting like notices of like block trades that are being done on silver options and futures on CME that are being done in size. And so clearly like silver is on a huge momentum rally. And yet at 933 as well, that's where this momentum just stops altogether and kind of just flatlines from there. So it's like what 933 or 934 is like this pivot point. I don't know what specifically it is, but it has impacted Tesla, the VIX, US Treasury yields, dollar yen, and commodities and silver. These are just four random things that I happen to not random, but these are four asset class categories that I chose. But there are clearly way more out there. And so my point of showing you this is that markets are very, very mechanical and systematic and interconnected. And so things that move, they might just move because other things are moving, and then there are systematic flows that trigger one another. And so you can't always rationalize it in sort of like human terms. Sometimes just things just happen because they happen. Everything, as you can see here, had a pivot point at that exact moment. I don't know, which kicked it off. It's very possible that none of these was patient zero out of all of these, right? But You have to keep these in mind and not like be very kind of siloed into just one specific asset class or something like that. Because if you do that, it's very dangerous because you will end up focusing on wrong things. You'll end up rationalizing movements in the market that may have nothing to do with anything at all about that asset. It's just simply a flow driven movement. And if you start thinking like, oh, this is people must be like thinking about inflation, no, like they may be, but like this is something that constantly happens, and I'm showing this purposely on CPI day, but well after like the actual CPI print itself. This is not a CPI related cross the board pivot point thing. Like silver traders do not telepathically communicate to treasury traders like 9:30 traders like this is going to be a pivot point for our markets. Like that's clearly not happening, right? So just keep that in mind when you are looking at markets on price action and all that, especially on like an intraday sort of basis. You don't have to try to rationalize. Sometimes, if it doesn't make sense, if you just look for other potential asset classes that make a certain pivot point on volume and all that kind of thing, or actually better yet, not on volume, because then it's just sort of consistent like algo flow and not like the additional active human being flow, if you will. But if you start seeing that, then you know that like this is being driven by systematic sort of forces. And then if it brings things way out of whack, in terms of pricing and price action, that's something that you can take advantage of potentially. Like, oh, this is being driven by this like kind of automatic systematic flows, and that has now mispriced this particular asset so much so that human beings are going to come in with their flow when they realize this, and so I'm going to position myself, against it or whatever it is. But whether or not you use it to your advantage, I mean, that's very tricky and hard to do. But don't let it become your disadvantage. Human beings do not trade in terms of the by and large percentage of flows that occur cross asset. It's just not people anymore. So that's about it, and we'll see you soon.